Welcome everybody to today's trading tip, and we're going to look at a slightly unusual type of trade, just as a little variation. We're obviously in a market which looks as though it could go long, but we've got the FOMC meetings kicking off today, and of course the all-important statement tomorrow, which does have the potential to move markets. We've still got oil, which is looking pretty shaky, and it'll be interesting to see how that impacts the markets in the next session, with it having little impact yesterday, to be honest, or far less so than one would have expected. So with that Fed announcement tomorrow, obviously, if they indicate within their statement that there may be interest rises earlier or more frequently this year than the market is currently pricing in, we could get a rise in financial stocks. So this is one trading idea. Play that as a potential. So here we have MS. Now, what we've got really, if we look on the data chart, 2-day and weekly, we look as though we're in congestion across the first two and moving into congestion on the third. We've got a very mixed picture with volume. Got buying volume in a couple of days ago. We're likely to have either buying or neutral volume when the market opens today, and neutral volume on the 2-day, and the weekly will continue in neutral volume. So really it does look very range bound, but obviously we've got this big event tomorrow which could impact pretty significantly. We looked as though we're going to form a reverse head and shoulders pattern there with around about $26 the neckline. You'll see those pivots there as on the daily chart, but we did retrace towards the back end of last week and moved up again on Friday. Pretty neutral session yesterday, only slightly to the downside. So here's the trading idea. We have talked before about butterflies. Those of you part of the options membership will be aware of butterflies. There is education there, obviously. But what we've got is an idea to place a trade which is very low risk and might well pay us dividends. So we're looking at a butterfly which has a $26 call on the bottom end, a $28 call on the upper end of this particular range that we've identified, and of course we'll sell double the number of contracts at 27. Now this will be short expiry, April the 1st, and really we should be getting this for around about 15 or 16 cents a share. So we could enter quite easily 20 contracts for a risk of $320. If it does move up, then obviously that is going to impact positively on the value of that position. With an April 1st expiry, the maximum return is $1 a share. So you can see how that's a pretty substantial return on your 15 cents, but of course it has to finish in the middle. We would be looking for a profit in the range of around about 120% on this particular trade, and we suspect that if we do get a positive response to the Fed statement tomorrow from financial stocks, then it will move to that area pretty quickly, which should allow us to rip profit off the table, despite the fact that there's a couple of weeks left to expiry. It's an alternative way of playing a potential trading idea, playing a potential move on some economic data, which is pretty low risk. Of course, we can go less than that, we can go 10 contracts. And remember, if we were to go 10 contracts, we'd do 10 contracts for the $26 call, 10 contracts of the 28, and 20 contracts of the 27, selling that particular leg. That's our idea for the day. I hope it's interesting, useful, and a different way of looking at things. And that's just one of the trades I'm considering for today. So before we go, if you'd like to see everything I'm considering and see the trades I'm really taking, why not take a trial to my Options Elite alert and trading service? That way, you can see exactly how I find the best trades that can produce the largest returns whilst keeping the risk low. Just click on the link below and get started today. You'll be glad you did. See you soon.